are good.
Hi, good afternoon. Today's webinar is the importance of title insurance. And today we have me, Nick Perrino,
Kris Cooper,
and Phil Forbes,
talking about the importance of title insurance. First off, what is title insurance? Title insurance insures the lender and or the owner from title defects that may or may not be discovered by the title exam. The title insurance is backed by a large insurance underwriter with longevity and deep pockets. So even if the title agent themselves may not be around for forever or goes out of business, the title insurance underwriter is usually still around and your policy is still good. Of the two types of title insurance, the first one is lender's title insurance. It covers lenders from title defects. It does not protect the owner or the borrower. It covers only the loan amount. It only lasts as long as that loan lasts, by the way. So if the loan is paid off, that coverage goes away. It's most often used during foreclosure actions. When they go to foreclose, they find a title defect and they have to use the title insurance to help fix the title defect. That means if they get paid off, they don't care if there was a title defect or not because they don't have a loan against the property anymore. The lender's title insurance is required by most lenders, and it is discounted if it's purchased within 10 years of a previous loan policy. The owner's title insurance covers the owner or borrower and their possible heirs for the length of the ownership and beyond. It covers them, most importantly, for legal fees or lien payoffs, and of course, against other title defects. It's a one-time fee, and it covers the entire sales price. Now, this fee also can be discounted if it's purchased simultaneous with a lender's policy, which is what happens usually at the closing, and it can be discounted if it's purchased within 10 years of another owner's policy. So if the seller has an owner's policy, the buyer's policy can be discounted as long as the seller's policy is less than 10 years old.
Nick, let me ask you a question about the one-time fee covering the entire sale price. I suspect that that's covering the value of the property.
It not necessarily covers the value of the property because your purchase price may not be exactly the same as the value. Also, if you have a purchase price of one amount, but then you improve the value of the property, this coverage does not increase with that improvement. So if you intend to improve property significantly, you may want to go back to the insurer and ask for an increase in your policy coverage.
At what point should you have that conversation with them? Before or after you make the improvement?
You should probably have that conversation after you make the improvement, unless you plan to make the improvement immediately. If you plan to make the improvement immediately, they could have you sign an affidavit and issue the increased coverage now.
So you can have that preliminary conversation with your title company when they're quoting what it costs to have title insurance on a foreclosed property that you pay $30,000 for, but we all know it's probably worth $100.
Correct. You can have that discussion now.
Okay, thank you.
Now, many people have made comments that title insurance may not be necessary because this property's had the title exam done on it, and there have been other title exams done on it. So, of course, the title exam catches all the issues. And an important fact is title exams do not catch all issues on a title. First off, the Ohio lien laws are very generous to the lien holder. They're not generous to a property owner. They do not require the lien holder to file a lien against the actual piece of property. And that's something that most people don't understand. They think that liens are filed against the property itself, so you can see the lien if you just check out that property. And that's not true. The lien is filed against the person's name. They don't have to show a social security number. They don't have to show the address specifically of the owner. It could be wrong. They don't have to have birthdays or anything like that for lien holders for most liens in Ohio. So it's very, very difficult to catch all the liens that might exist against a person, especially if you have an owner of a property with a common name. If somebody has a very uncommon name, it's pretty easy to check for their liens. If somebody has a very common name, a Smith or a Jones, for example, it's almost impossible to catch all variations of that person's name and see what liens might affect that property. So the Ohio lien laws in themselves help create title defects, even with a full title exam. Title exams also cannot catch fraud. If somebody brings in a girlfriend with a fake ID to say it's the spouse, if you're dealing with an Erpenbeck where the fraud is hidden for years, if you're dealing with other types of fraud, somebody stating that they are unmarried when they're actually married, or other type examples, the title exam can't see this. They can't do anything about it. Also, a title exam cannot tell if a person who executed one of the documents in the chain of title was competent or incompetent. And everybody knows that every once in a while an heir is asked to sign something in the nursing home, and there could be a question as to the competence of that person that's raised later on after your sale. A lot of title exams are done now in an abbreviated fashion. The title underwriters for these title insurance agents are allowing them to do what's called a abbreviated search or a two-owner search. Everybody knows that a property could sell a couple times just within a very short period of time, maybe a couple years. Well, a 2-year or a two-owner search means that they're only examining the title for a couple of years. They are not doing a 40-year search, and that's because the volume is so high they just don't have time to do it. Also, when you're doing rushed titles, it's harder and harder to look for those common name liens or for any liens in general. It makes it very, very possible to miss common name liens or liens in general. Also, there's a lot of turnover in title agencies. There are a lot of people being hired in that don't have enough knowledge, and the training process for them is a little short. So you're possibly dealing with people that don't know exactly what they're doing because they're new. And yet they're in charge of helping prepare documents, helping record documents. And when it comes to any of these, a simple mistake on any of those documents can create a major title defect. So we're looking at title defects not only from the past, but also from the actual closing you're in. And I always advise people to ask for the deed to make sure that the legal description is correct, the names are correct, all the property is included, things like that. It helps avoid some of the more costly mistakes that happen from the actual closing. So title exams do not and cannot catch all possible issues. Title insurance is extremely important because the possibility of poor quality work from previous closings or the current closing on a situation where the home purchase is often the most significant purchase of a person's life. It protects the lender and it can protect the homeowner, and the protection can be also against a delayed or canceled closing in the future. If somebody buys a piece of property today and there's a lurking title defect that's discovered later, it's not going to be discovered until they go to sell the property in the future. And then if the title exam discovers an issue, it's possible that that whole closing can be canceled, and that can be horrendous all in itself, but oftentimes closings are in a domino situation, so one title defect can affect several closings. The title insurance can help against that by giving an indemnification and allowing the closing to continue while they're working on the problem. Also, most people purchase insurance on much, much less significant items. Television is a good example. They'll pay a couple $100 for protection just to cover a $1,000 TV, and yet they hesitate paying a couple $100 for something covering $100,000 of a purchase price. So why is title insurance important to you? As a realtor, you work hard to build trust with your customer. The customers appreciate information that helps them make intelligent decisions. You also want your reputation or your future referrals to not be damaged by closing problems caused by a title issue. They may be very happy with you today, but in a couple years when they go to sell the house, they find there's a title defect. They're looking for somebody to be mad at, and you're a clear target. So how can you help? You can inform your borrowers of their options before the closings. You can share with them how current situations have made it more necessary for title insurance, especially in the realm of the rushed closings, the title agencies who are bringing in new people regularly and trying to train them and put them in line. We all know how much information there is in this business, how much there is to learn, and simply training somebody for a month doesn't allow them to do this job properly. You can put the owner's title insurance in the contract to protect them, and if the borrower is informed and they choose not to purchase a policy, you're covered in that situation. We all know if somebody does have a problem and they have to hire an attorney, the attorney's job is to find somebody with money. And if they think that includes you, suddenly you're going to find yourself in the middle of a court case because of a title defect. So, feel confident that you provided a solid recommendation for your client to enhance your reputation as a knowledgeable agent, and know that you've given them full information to help them make an informed decision. And once they have all the information, the decision is theirs, not yours, and it helps you in general.
I've got a few questions, Nick. And we were talking about this briefly beforehand. At the closing table, several times, the buyer is quoted for title insurance. It's discounted for the first 30 days at this price. And they can write a personal check for that amount and give it to the closing agent right at the closing desk.
Correct. What
I'd like to know is as an agent, once that happens, I don't see anything else. So once the policy is paid for at the closing table, that the check is given to what happens next? When do they get their policy? What does the policy look like? Who underwrites this policy? And do you know much about what it covers and what it doesn't cover?
Okay, that's a very good question. The first part of your question is, after they pay the money, do I hand them a policy or do I not hand them a policy immediately? And the answer is, I do not hand them a policy today. I have to take the deed to the county and get it recorded. Once I get the recorded deed back, I'm going to attach a policy for the owner to that deed, and I'm going to mail it to them. The policy looks like a standard insurance policy. If you went to a regular insurance agent for your car, the insurance agent is not who the policy is written on. The policy is written by the bigger insurance company. Well, the same thing happens with title insurance. We write the policy, but it's based upon a very large underwriter insurance company. And we mail that to the owner of the property, and they should be keeping that with their records. But the policy has in it all the terms of what's covered and what's not covered. If anybody has a question on what's covered or not covered, they can always call us and ask for a blank policy to go over with the client or to send to the client so they can review it and they'll be able to see what's covered and what's not covered. And a lot of people think that survey issues are covered in policies, and most survey issues, especially a boundary line dispute with a neighbor maybe, those type issues are normally not covered by these policies. But many of the title defects that we just covered are covered, and mechanics liens filed before a closing are going to be covered. Mechanics liens filed after a closing may or may not be covered. You can get additional coverage to make sure that you're covered on those if you think work was just completed on the property. But in general, the policy has everything in it that's what's included and what's not included. And if the customer wants to see that, just ask for it ahead of time and we can get you a copy.
Terrific.
Hey, Nick, you mentioned in your PowerPoint here that the coverage covers the owner, their heirs, for the period of their ownership and beyond. Can you kind of expand on the heirs portion of that statement and also that quote-unquote period of ownership and beyond? Because I think that's something that everybody would probably want to understand a little bit more to see how that coverage really is pretty thorough and how it helps long term.
Sure. When people purchase a policy, if something happens to them and they die and their heirs take over ownership of the property, that policy is going to go to cover the heir also, or the heirs that take title to the property. It's not the same as if they sell the property to one of their relatives. The new relative will not have their attorney's fees or coverage for them personally. That coverage stays with the original person. But if somebody inherits the property, the policy will move on and cover the people who inherited it.
You mentioned and beyond. Does that mean, let's say I sell a home to somebody and 2 years later they discover a title problem going back maybe even before my window of ownership in the property? Would my owner's title insurance cover in that event?
Yes, it would, and that's part of the beauty of it. You sell the property and your policy stays in place. So if the next person has an issue discovered or an error come back and claim that they have an interest in the property, then they come back to you based upon your warranties in the deed. You give them a general warranty deed. The next buyer comes back to you saying you warranted title. Well, you go right back to your policy underwriter, and they have to cover that issue as long as it was prior to your ownership. If it was something your ownership created, your policy is not going to cover that. But if it was prior to your ownership, you absolutely are still covered based upon your policy.
Okay.
So the policy transfers in some case?
It's not that the policy transfers. If the next person doesn't buy a policy, then if they have to hire an attorney, they have to pay their own attorney's fees. And if they have to go after the previous owner based upon something a couple owners ago, then those costs for collection or proceeding against the prior owner are not going to be paid. However, the prior owner still is covered, and therefore their title insurance policy will cover the issue if it gets to them.
Got it.
If they're liable under the warranty, then the policy will cover them, absolutely.
So in talking about transferring policies or the owner selling a home that has a policy on it, is there an advantage for an incoming buyer to purchase a policy if one already exists?
Yes, absolutely. The buyer should be purchasing a policy to cover their costs, and the benefit of having a policy in place already, as long as a prior policy is not 10 years or older, is older than 10 years, as long as it's not older than 10 years, you get 30% off of the new policy's amount covering the same amount as the old policy. You get 30% off of the cost of that portion of the policy. So you get a reduction in your costs, and you know that should you have to file a claim, the prior owner also has a policy. So everybody's got good pockets to deal from in fixing title issues, long lost heirs, liens, things like that.
So as an agent, if we're listing a home, a property, one of the questions we may want to field to our sellers is, do you have an owner's policy of title insurance in place?
That is a great question. And anytime we pull a title exam and we find a defect, that's our very first question. Do they have a current title insurance policy in place? But like you said, for negotiation, it's good to know also, because you know at that point that you may be getting a reduction in the cost for your buyer.
Now that's regardless of what title company is used to close the new deal versus what title company closed the previous deal.
Correct. It makes no difference what policy, what company the policy was written on originally. The new policy can be a completely different company and yet still get that reduction in cost.
Now, what do they need to prove that they have a policy in place other than the policy?
Proof is pretty simple. If you don't have the policy, you just pull the settlement statement out from the purchase showing that you bought it. If you paid for it after the closing, a canceled check will work also. So you don't have to have the policy in hand, but it's helpful to have the policy.
Great. With that, we're about 10 minutes to go here. We'd like to field questions from the attendants. I think there's an area on here to enter a question if you have any.
Now, while we look into those, Nick, one of the other things that you addressed in, I think it was page 5 of your PowerPoint, was that especially lately, this seems to be more important. Personally, I ran into an issue, I think it was yesterday, with a guy who owned about 10 different properties he had bought through foreclosures.
Okay.
And he had paid cash for the properties, but he was borrowing on this 12th or 13th property he was buying, so we were doing what we do. Part of our due diligence was to check whether or not the properties really were truly free and clear. Well, the attorney involved in that closing did basically an update for us, telling us whether or not these individual properties were free and clear. Of the 11 properties that he had as investment properties that he had purchased through this process, 2 of them had unreleased liens still attached. Can you maybe address the heightened importance of getting this type of coverage in cases where the property's been through the foreclosure process?
Okay, absolutely. The foreclosure process right now is a very, very high-risk purchase. The foreclosure process itself has so many rules, regulations, items that have to be filed. There are so many things involved with the foreclosure process where there could be an error or mistake that isn't noticed or it isn't seen, that if somebody buys a foreclosure process, I highly, highly recommend that they get the owner's title insurance. The fact that you can have an issue come up with an unreleased mortgage or an unreleased lien is the same for every piece of property that you purchase. Lenders are not the best at doing back-end paperwork, which includes releasing their mortgages. And we just had a mortgage that was from a 2004 purchase, so it was 10 years ago. It was the seller's mortgage. It's unreleased. We thought it was a standard request for an unreleased mortgage release. And the lender who's involved now had bought out the other lender. So the companies have changed. They did their research and they don't see proof of the payoff of this $124,000 mortgage. So they've asked for this loan to now get paid off instead of just issuing a release. And this is the mortgage that was against the prior owner. It all was compounded by the fact that the prior owner had filed bankruptcy and this loan was in collections. And they can't figure out whether they've been paid or haven't been paid, and they're not willing to release their mortgage. An owner's policy in this situation would help out tremendously. And for your buyer to understand that that was a higher risk closing because it looked like a straight payoff of a loan, it's almost impossible to have them understand that this was higher risk where they should get the owner's policy. But in general, lenders are not the best at releasing the mortgages, and if too much time goes by, you don't go to sell your property again after 10 years, 12 years. It's very possible that that lender changed hands now 2-3 times, and for them to research that to give you a release, especially quickly, is very, very difficult. And the owner's policy helps out with that.
In addition, just a quick comment on that. In those situations, you don't have the cooperation of the seller. And in addition to it, you also obviously have a seller that was in some sort of financial distress, which means you have an increased likelihood of tax liens and everything else. And without that seller even being present in the transaction, the disclosure of that stuff, the likelihood of that disclosure is even less. So, on those foreclosed, not only people buying from a foreclosure, but buying a property 2 or 3 owners after the foreclosure. I think right now, especially, it's a great time for people to be very, very aware of potential risk in there. So
it is a great risk, and that could be a question that people ask. was there a foreclosure in the chain, because you don't usually, as a buyer, get information about who the prior owners were. You don't get information about what type of defects were on this property that look like they've been cleared, whether there have been any previous court cases involved with this property at all. And because that's such an unknown, it's very difficult to advise your client to say that, you think this property will be clear in the future.
We do have some questions from our attendants. Nick, can you discuss the difference between a basic and a premium coverage of owner's policy?
A little bit. The differences are best looked at when given literature that gives you a comparison, contrast between what's covered and what's not covered. Basically, the premium coverage policy is 15% more expensive than the standard policy, but it has some additional benefits to it, such as it has an inflation endorsement, which means if the value of the home goes up based upon inflationary, just standard increase in value, your policy coverage goes up with that increased value. That inflation endorsement can be a little confusing if you plan to improve the value of the property by rehabbing it. A rehab increase in value is not the same as an inflationary increase in value. So it doesn't cover rehab improvement value, but it does cover inflationary increases in value. That's one of the things. It has a couple other coverages. It'll cover against violations of homeowner association rules. So if you have a shed that was built in violation of the rule, I saw somebody that enclosed their back deck with a screened-in porch, and it was said that that was built improperly and it had to be taken off. This other coverage, the premium coverage, will cover fixing that situation, including removing the shed, or I'm not exactly sure how they're going to deal with the screened-in porch, but the policy will help you out with that.
Great. What's the premium coverage and how much does it normally cost? Well, I think we just went over what it is. How much does it normally cost?
You can call in to get the exact amount, but the average cost it's going to be 15% more than the regular owner's policy.
And the policy's price is determined on the value.
The price is determined on the purchase price of the property.
Right. So the more expensive the home, the more expensive the policy.
Right.
Now, is there a formula?
If you got a $100 cost for a standard policy, it's $115 for the premium policy.
Okay. And is there a formula to figure this out, or is it just safe to just call the title company and ask?
It's safest to call the title agency to ask them what the costs are on these things.
Can it vary from title agency to title agency?
In Ohio, these are stated. You can't vary it. There's no competition on the cost of the actual insurance in Ohio at all.
Okay. That's it for the questions. Hey, that was really good stuff. I really appreciate everybody coming out. Nick, thank you.
Chris, thank you.
Phil.
Nice to see you, Chris.
Thank you very much.
Phil, thank you.
Good to see you.
Until next, this has been the Realtor and Lender Committee at the Cincinnati Area Board. Thanks.